Hey, how's it going, guys? All right, Deborah, how you doing? Good morning. All right, so we had our trade set up yesterday. We're talking about basically us reaching a value area high for this local price action that we got built here from this range. We targeted down here during our signal yesterday. We basically what we wanted to wait for was a change of character occurrence at the value area high. We had the confluence of us reaching, let's see here, we pull this local high here with your fib to the local low, right? And in this zone where we have the golden pocket in the 786, you can box these zones and find out if there's any confluence inside those zones. And the confluence that we had was the 786, the golden pocket zone that we are just talking about, the value area high, reaching the value area high, or an area where a large amount of supply usually is, where people are prepared to sell within a range. And we also had a order block that got mitigated. And then the last little final rule that we were looking at was the change of character. So right here is where we had our break of structure. We defined this as a strong low. And then shortly afterwards, we came down and we broke it. And that's what began our short signal, basically. If I go over to like the Discord, if we went over here and we spoke about it here right after the live, basically. And this is kind of like where we were preparing. And that's exactly what ended up happening. We got that break and we ended up hitting our target. I did close my trade early, unfortunately, because over here we had a strong bounce off the value area low, and there's also I think it was a 15-minute order block here, or a 5-minute order block. And then we had a bounce. It threatened our stop loss, which was originally right here, and then we started to consolidate. And at this point, there's liquidity stacking on both sides, and it was of basically equal value. So there's a lot of like indecision of where this could have gone. So I ended up closing the remaining amount of my trade when we got a small amount of profit around here. And then right after that, of course, we hit our measurable target. Now, we actually are likely going to get a trade during this live, because we're getting close to the New York open session. And right now we're actually building a structure that usually defines a reversal. So that's what I'll be preparing for today. So now that we've got that out of the way, I spoke about yesterday, I'm going to update the fixed range volume profile to the active data within the range, which is up until here. But the moment we get acceptance inside the range again, I will be pulling the fixed range volume profile to the newly added data once we get that proper acceptance. Until then, we got to anticipate this acting as a potential form of resistance. Let me just update these here. We don't need that anymore. I got this wick marked here for the range's extreme high, just to prepare for potential SFP up here. All right, we have our downturning momentum that broke. Right, we got broad momentum here. We have evolving momentum right here. The evolving momentum broke. We have the broad momentum here. So what this sometimes means is we will be range bound until we fill this negative space. And we might have another, 5 hours of range bound activity before we actually break to the potential upside here, or continue back going down. The key level that I'm watching is right about here. So we got our change of character occurrence technically occurred when we broke this high right here on the 5-minute. Right now we're looking at the 5-minute time frame. So we have basically signaled that we likely are going to reverse to the upside already, but now we're having a bit of a pullback consolidation, which is very, very common and it won't invalidate the reversal to the upside unless we break these lows right here. Let's see, this low right here. So this is our invalidation point for the pump, but we want to have this break right here. And then we can use the active strong low, which is likely going to be around here, to guard our capital with a stop loss and target the opposite side of this range at this value area high. But we're going to be fairly careful at the point of control along the way up. And we might need to set an alarm at the value area low in case it acts as resistance as well. So if we start seeing reversal structure, we get a change of character occurrence. We might need to get out as early as we came in, basically. How you guys doing? Good morning from Vietnam. Nice. Welcome, Mike. Blackwater, how you doing, man? Thanks, Kazim. That's awesome. Did we also sweep the previous day low? We did. Yeah, we grabbed the liquidity from this local low here. And that usually induces a pump. But it depends on how we break it, right? If we had a break of structure below this level, like if we came up here, maybe we rejected off the previous POC and then got a lower low. At that point, that usually confirms a push to the downside, and then you can use the momentum of the volume from this double top structure to define where we're going to go next, right? So basically draw a level of resistance at the top, so you got your level here, so we can get from the center where the neckline is, pull a trend line down to the neckline, click and drag, bring it to the bottom of the neckline, and then that will tell you the measurable based target based on the momentum of the structure and where we're likely going to go if we have a confirmation like this, right? We do have this local demand zone right here, which is likely the result of why that didn't occur, right? We had residual buy orders here. We had a few order blocks, and we had that decent pump, which could be the conduit for a reversal and allowing us to go more range bound here for a little bit longer. The more range bound we are, the better, right? Because it helps create cool downs in the market. The investors are getting out while new investors are getting in. But if we don't get that range bound activity, then that's telling us that the sell pressure is stronger than the buy pressure, and that's what creates these double tops, right? We get a failure to create higher highs, and then we end up confirming to break lower. If we look at the on-chain data, this is what it's basically doing in the background. Let me refresh this chart. Okay, it's already refreshed. So as we range, look at the let's go to the daily for a quick second. Right, so as we range, like we did from February to October, and then November here to February, we created resets in the market that we've never ever seen before in Bitcoin at all-time highs. Like this has never ever occurred on Bitcoin at all-time highs before. But what it allows it to do is create resets in the market. So here, this is the RUP chart. This is the relative unrealized profits chart. This chart shows you basically how much unrealized profits there are. And if there's a bunch, we end up getting overheated and it creates a bear market as people induce a large amount of sell pressure and then just keeps on tumbling down. But when we went range bound from the all-time highs for so long like we did, it allowed new investors to come in and old investors to come out and creating a huge reset in the market. And I think we have the ETFs to thank for that. They're creating a stability. Because they can't legally sell their Bitcoin when they buy it. They have to hold it. And you can track it when they buy it through Arkham Intelligence, for example, BlackRock. This is BlackRock's account. And you can track them every day, right? Let me refresh this because I'm sure this is old data. It'll show you everything live, but you still have to refresh. And there we go. So let's see what BlackRock did in the past 24 hours or so. once it loads. But you're getting the point. Like basically, they have to buy it. They have to have Bitcoin back their supply that they're selling. And it looks like they bought a lot of Ethereum recently. They got a... Well, actually, they sold. Yeah, they sold some Ethereum after. Oh no, they bought. Okay. But yeah, this is where you can go. They can go to Arkham Intelligence to track other people's wallets. You can track politicians. You can track big institutions. ETF providers are a good one to follow. You can see what their flow of funds look like. But yeah, they're kind of responsible for us having some more stability in the market. So they keep buying. They're buying for their ETFs. While some of the retail has been selling. There we go. So let's go to the 15-minute again here. But yeah, if we go range bound, basically it's allowing us to have the reset. Oscillators reset, indicators reset, EMAs catch up. And new investors come in, old investors are coming out. So the longer we range, the better, and allow us to extend our targets kind of stuff here. And if we range, we actually stack liquidity on both sides, right? In this case, we took liquidity from the downside, and we've only been adding liquidity to the upside. So if we go to the liquidity heat maps, we can kind of verify that, and we can see what the weighted value of liquidity is on each side. And you can go to coinglass.com. It's free to use, and you can find out what the liquidity is. And in order to like use it properly, you look at the age of the range that you're in. So if you want to monitor what the liquidity looks like within this range alone, you use your measurement tool on the left hand side. You click and drag, and you find out exactly how long we've been in this range. And we've been in it for 1 day, 14 hours, and 45 minutes. So we can use that time frame. So 1 day, 14 hours, to find out what time slot would fit within that. So we have 24 hours here, but we know it's like 14 hours longer than that. So let's do the 48-hour chart. So that will include the entire range that we're in. So this is the behavior right here of the liquidity for the last 48 hours. So here we added quite a bit. Like a lot of people got pretty cocky at 92K. I'm not gonna lie, that's like a little bit too much. I'm guessing. Let's see, what was the reasoning for that? I don't, geez. Yeah, so they jumped in with $102 million worth of liquidity. And we came up, we added more to the top. We didn't end up coming up to grab it, but we came down and we grabbed this liquidity here. That was during the moment where we had this bounce. Let's see. It looks like this bounce here is where we grab a fair bit amount of liquidity. Oh, here, sorry. And which was added during this moment where when we had this pullback. A lot of people jumped in on the pullback, and then we climbed up. When a bunch of liquidity was added, and we came down and we hunted for it here. And if we go back to that heat map chart, we can see we have most of the weighted liquidity now. That's locally to us is at 95,241. So we can mark that right here. Go to our coordinates. 95,241. So we added more liquidity here. And we already know that like this is the 24-hour liquidity, right? Now if we look at a larger time frame, like 6 months, we have $6 billion right beside it. So now we have a bunch of stacking liquidity on top of us, and increasing our probability of coming up to grab that very soon. Think of liquidity like a magnet. You don't want to be a part of liquidity. You want to be putting your stop losses in areas that are guarded at strong lows and strong highs, depending on if you're doing longs or shorts. We're about to have that break here, guys. Let's go to the 5-minute for a second. Let's see how the 5-minute candle closes. All right, 5-minute candle closed above. Yeah, price acceptance here. If you want to wait for the safer candle, you can wait for the 15-minute. It's got 9 minutes left on that candle close. But there's one thing that you guys don't want to ignore, is the weighted liquidity below us as well, 89,227. So if we break to the downside at any point, that's an area of concern that you're going to want to watch, because we could see a bounce there, because liquidity below us is normally used as entry liquidity. It could still be used as sell side liquidity to help people sell more of their assets if they have a large amount. But you should assume that it's more likely to be used as like liquidity for entries, not exits, just because it's below us. And that's at like 89,227. So you can look for confluence at that price. We can write that down. And that's way down here. The last 48 hours, yeah, we have about, what is it, 102 million here and like 79 million here. But locally, there's more liquidity above us. This is guarded, right? This is heavily guarded by 2 zones. Whereas this is only guarded by 1 right here. And locally, because of how the order flow is, we have liquidity here, we have liquidity stacking here, we have liquidity here. All this can be used as like a domino effect to induce the move to the upside. All right, that is pretty much it for Bitcoin's price action, like locally, what we need to prepare for. Be careful. I think this will be a retest before more down. It's very possible, yeah. If we watch out for like 93,028, we could come up and retest the value area low and have it act as a form of resistance to bring us down. So you have to babysit this trade up until this point. See how we behave there. Right? If we get a low time frame change of character occurrence, it could be an early warning sign to get out. I'll let you guys know when I jump in on this trade. We had the 5-minute break. We already had the change of character occurrence here off of this local high here. If we get the 15-minute candle close, I think I'm way more likely to jump in. Okay, what we got here? How are you defining the end of that range of the fixed range volume profile? Okay, so you define the end of the range when you see a break of structure below it. So here's the value area low, and here's the break of structure below it. So we normally come up and retest the level, which we did at the time, but we've developed it to go further. So this is the moment where we kind of broke below it. And whenever this occurs, this is confluence for a trend trade setup. So if you see here, if we had a break of structure up here, right? That's one of the core rules for a trend trade setup. So rather than trading an internal range, where you normally wait for changes of characters on each side to prepare for longs or shorts, if you have a break in structure instead, you assume a target of the previous value area, and that would be here, right? This is also like a local demand zone. So at that point, we target there. If you're in a short, you normally you hope for acceptance, like a break of structure within it, right? But in this case, we got the change of character reversal instead. But yeah, so if anyone wants to do trend trading, that's a huge core rule. You got to watch your value area. You can use formations as well, like understand where the apex point is between structures, right? See where the break is going to be. And that could help define either a front run, or sometimes it's in confluence with the value area high and the value area low when we have those retests. And it's really good for preparing you for more of a move like what we saw here in the past few days, right? This is technically a trend trade here, where we broke this formation, the falling wedge. And we spoke a lot about this structure yesterday during yesterday's live, so you want to learn more about it, you can watch that. So I don't want to take up too much of your time. I've got about 20 minutes left to like hang out with you guys. And here, normally, by the way, I stayed till 9, but I only had until 8:45 because I got to bring my hobbits to school today. It's usually like only, it's not going to be a frequent thing, don't worry. But yeah, we got the what's called a confirmation formation extend outside of this range. We had a basically a retest off a POC of this macro value area here. So we had some confluence for this run to occur. And in lower time frames, obviously you can dissect this too and find reasoning for it to pump. But yeah, it was a pretty wild move with the measurable target of reaching this all-time high again. But we're really, really close to a huge area of concern. Where all that liquidity was stacking, right above the range that we're in right now, we have about $6 billion plus, like far more than $6 billion, but we have a concrete area of just $6 billion on one single price point, like right here. So at this point, we got to repair that anyone who jumped in with a large amount of funds, normally with trading with more than $40 million worth of volume, they look for high areas of liquidity like this to prepare for exits. And we're very close to that area. It does look like we're getting a little bit of a front run because we have quite a bit of liquidity here. And we're at that zone now where people can use it as exit liquidity. But once that runs out, which has already kind of happened, we already ran out. We're going to come up and start grabbing the new, like the higher local liquidity above us. And that's an area where we have an extreme amount of confluence for a reversal. I don't want the reversal, but we could end up getting it because if you look at here, we have a giant volume shelf. And the point of control for this value area range that we've been in from November to February. And we have all that stacking liquidity right below that point of control. So that confluence could cause rejection. I'm hoping the rejection just brings us to the value area low. So then we can get a break of structure and a higher high to bring us to at least 101K. Because at that point, when we have that break of structure in the higher time frames, we have acceptance, proper acceptance in this value area. We're in the value area now, but we don't have proper acceptance yet. We just need that higher high first. Let's zoom in on the 15-minute again. Let's see what we got. All right, so we didn't get a full body closure yet. We're testing it. But the 5-minute close. So if you jumped in on like the 5-minute break, this is your strong low right here. Oh, sorry, right here now. So you'd have to put your stop loss there so it's protected. But I'm going to wait for that 15-minute break, 15-minute price acceptance here. More trade participants react off stuff like that. Then I'm going to jump in for a long to target this high. Kyle, is there a point of me being an investor if I'm in Finova? And so that's a good question. InvestiShare is technically contracted by Finova. So we as a team work for Finova to provide you the same service that InvestiShare has. So it is the same thing. It's one and the same. So the only core difference is the price. The price is lower on InvestiShare side. How it goes at Kyle's the man. Oh, thanks, man. I've learned a lot from watching his videos and being a part of his courses. Yeah, you're really active in the calls, man. Like, I love seeing you there. So what we got? Listening to two otter streams at the same time. So you're probably talking about is Alex Crypto live today? Oh no, it'd be tomorrow. He's gonna be busy, right? On Friday, because he's coming over to my place. Him and I are gonna hang out and meet each other in person for the first time. Like, he only lives about 3 hours out, and he's coming to visit family nearby my place. So I'm gonna hang out for a little bit. What's up, brother? Could you do a TA on Cubic as always? Yeah, we can do some TA on Cubic. Will you be doing your lives always at this time from now on? Currently sitting at work watching the stream without sound. Yeah, I'm not sure if you can hear me reply since you're watching without sound, but yeah, we'll be doing this every single morning at 8 a.m. till 9 p.m. Real Talk Trading. Brian, it's on chat here. He's one of our coaches. I think it will be a retest before more down. Oh, I already read that. Yeah. So yeah, it could be, like I said, yeah, before. It could definitely be a retest before more down. So we have to watch this cautiously. But like I said before as well, we have this momentum here, sell side momentum. And sometimes when we have that much negative space, we normally either A, like come up, reject, induces a pullback, then a higher high, break a structure, continuation, or we just range until we fill that negative space. But normally there's confluence alongside these momentum lines. If you want to validate these trend lines, because you shouldn't always just blindly trust a trend line. Never just jump in on a trade because we tapped a trend line, unless you have data to back it, and the only data you can use to back it is like confluence, like order blocks. But live data would be something like the order books. So we can look at the order books, see if there's a sell wall alongside that trend line, and that will tell us that other traders are agreeing with your trend line. We have a little bit of a sell wall, but mostly to the upside. Quite a bit to the upside. 92,970. 92,970. Okay, it's right right here. Oh, sorry. I didn't mean to put text there. Right here's a sell wall. But it's very small. We have about it's already been removed. That's funny. I think we might just tapped it out. Their next wall is at like 93K for about 100 Bitcoin. There's not very many trade participants in just yet. Just when New York open, you'll start seeing concrete walls like this one over here. We have a sell wall, or a buy wall, sorry, for 400 Bitcoin at 91,610. So we have a lot of buyers like waiting just below this wick right here. Okay, so tons of buyers trying to use the liquidity that was added with limit orders, trying to catch the knife, the 100 Bitcoin, or is it 100? 400 Bitcoin. Yeah. Can you show how you drew your volume profile? Yeah. So here is the start of the range. The time where you can pull the range and kind of depend and think that you can actually depend on it is when you have like a potential break of structure, continuation, or change of character. I tell beginners to change a character rule if they're just starting off as a trader for the first time. So once you have like 2 changes of character occur, right? So one change of character here, you could start pulling it if you like. If you want to wait for it to be more dependable, you wait for a second change of character occurrence, which is way up here. So you can start pulling it here to here if you want to be more dependable. But the moment you get your first change of character, you can pull a fixed range volume profile, because then you can start assuming targets. You just got to wait for, obviously, the proper confluence that you normally want to wait for before you're jumping into any trades. But at this point, Eric can pull this back. So this is where we got our first change character occurrence within this area, right? So you can use the value area low that was actively occurring at that time to help generate a target of the value area low. But in this case, we bounced off the POC and the VWAP. So there's lots of confluence of like not jumping on this trade. Like even though we had the change of character, you had to assume that there could be barriers still. And we had that VWAP barrier. We had the point of control barrier. Came up, grabbed the newly added liquidity from this high, and then came down. I remember us like looking at the charts when this was happening right after we jumped in on a community call And this was nuts. Like, this was pretty wild. It wasn't letting us get in. And some people might have jumped in up here, but this was the like SFP candle right here. When we came up, grabbed all the liquidity and closed back inside the range. But traditionally with an SFP, you want to have your stop loss above the wick to keep yourself safe. But the R&R to our measurable target wasn't worth it. So this one I didn't jump in on. But right now, yeah, the fixed range volume profile can continue until we got this break of structure, telling us that we are using the value area as resistance until we get proper acceptance back inside. The moment we get that proper acceptance with the break of structure in here, I will be updating this poll to see what the new value area data is, since the price action will be a part of that range, and that causes a range extension. Um, 8 minutes on this candle. I like what I'm seeing on the 5 minute. I trust that. I could actually probably jump in on this. I have to log in. Okay. Make sure you log in to your exchanges before you do TA. Rule 136. It's like, if anyone was wondering what kind of exchange I use Blowfin, and I don't pick my exchanges based on fees. I pick them based on safety. If I see the reserves are stable, which should be a part of everyone's routine. Like the InvestiShare members don't need to do it, or the Finova members don't need to do it, because I do it every single day. I look at the reserves to see how safe things are. If I see a crazy withdrawal event, I'll usually scream it through the rooftops. All right, here we go. So I'm logged in. We got 2 minutes left on the 5 minute candle. We're building a vector candle right now, which tells us that there's a large amount of like micro orders coming in that could, normally these get filled back up pretty quickly. We retrace back into them. All right, so I'm in my Blowfin account now. Got 1 minute on this 5 minute candle. What do we got for the 15? 6 minutes and 45 seconds. Might as well wait for the 15, just be safe. Six minutes. All right, let's pull up the chat here. Sorry. Can you show how you drew your... Oh, yeah, okay, we went through that. Chad saying, the trend hunting strategy you teach in the 30-day trading course has met all the rules for entering on the daily. Curious on your thoughts. It's new strategy to me, ongoing trend on the high time frames. The daily, if you back test the daily, there isn't very many opportunities with the trade hunter strategy on the daily. So you can back test it all in probably just an hour. But the win rate on the daily is relatively high. So if all the rules are met on the daily, the downside is you lost a lot of the actual move, right? So it's best to use that on the lower time frames, not like the 5 minute, but like the hourly is really good. And that could have gave you the front run opportunity to catch this whole entire move. So I wouldn't be using it on the daily in like where we currently are resting right now, because where we're resting right now is an area of concern for potential confluence of a reversal, right? We're talking about we might only make it to 95,400. We're all like the $6 billion worth of liquidity is that could induce a giant crash. So I would recommend like having multiple strategies, one for the trend, like the one you're talking about, and one for range bound price action, because right now is the time is for like a range trader right now rather than like a trend trader. I'm going to just update these. There we go. Okay, 4 minutes left on this candle. I might not have time to do more analysis on anything else, because I want to make sure we can get in on this trade. Pretty much the moment this candle closes, I've got to go, guys, because I have to go pick up the kids or bring the kids to school, so I can't really diddle dally. I usually answer questions until I have to go, or until they're all answered. But I have to rush out this time. Would it be smart to wait for it to break? Also for the downtrending resistance. You can wait for the momentum break too. We did have the evolving momentum break right here. We're building an accumulation structure, right? So we have lots of confluence for reversal. We're above the VWAP. We have a deviation of the value area, which is also a bullish structure. We bounced off a local demand zone. We bounced off of a macro point of control. Like, we have lots of confluence to go up. We have to be concerned here. We have to watch out from here. But everything is pointing up right now. 3 minutes left on this candle. Oh, and Brian said he's going to be going live. So Real Talk Trading is one of our coaches. So if anyone wants to just learn more right after this one ends, you can jump on with him, and he can help you through stuff too. He just started his YouTube channel, so if you definitely gotta subscribe and check him out. All right, 2 minutes left on this. I'm gonna get my risk ready. Using about, what's the max drawdown before it's invalidated is right here. So it's 92, not 286, with 0.5% drawdown. So that tells you that the maximum amount of leverage you could use is technically 50x before you get liquidated. So just watch out. Don't use too much leverage. I'll be using 2x to reduce my fees. And we're in a high liquidity zone, so I'm not worried about slippage. Stop loss trigger price. It's a little bit unique on Blowfin, so I'm just gonna. All right, 1 minute left. This is where the patience comes in with trading. If you have a certain set of rules, always wait for those stars to align before taking action. Because this has got 56 seconds left. Within 20 seconds, we can have this candle close down below this level, even maybe below the VWAP. So we want to make sure that's honored before taking action. Twenty seconds. We're heading to the stream when Kyle's done. Okay. Real Talk's awesome, as well as part of the team. Everything this man does on this point, he's like an AI tool. That's human. He keeps the, yeah, thanks, man. Make sure the platforms are safe, and also helps us identify good setups and teaches us how to execute orders within precision. All right, we got this candle close. We have proper acceptance above this level. We have a little bit of a sell shadow wick, which could induce a little tiny bit of a drop. But everything's aligned for a pump now. So I'm jumping in on the long with 2x leverage. My stop loss is right below this local low. If we break this low, this is the invalidation point. So breaking that low usually would mean we'll be going much lower. So don't play around with your stop loss and move it lower and lower and lower like I see some people do. Let yourself lose if the trade gets hit. You learn from your losses, and you can find out like what could you have done when you lose, so you can learn from it. But yeah, we have a lot of confidence for the pump. I'm letting it ride up. This is where my target is, up here at 93,900. I'll be watching out at the value area low for resistance. I'll be watching out for resistance at the point of control. So use your horizontal raise and set alarms. Click on your trend lines and just set alarms. So you get yelled at when we get to those locations, so you don't have to stare at your screen all day long waiting for it to hit those areas, right? You can have a specific sound for when your stop loss gets hit, so you know like what each sound means, right? You can have a unique sound for each area too. I recommend setting it up so that it is only once for certain areas. If you're waiting for a confirmation of an area, once per bar close is great, because that will tell you, the alarm will go off when the candle closes past your line. This will go off the moment the candle touches your line. So only once is great. Try to make it annoying as possible. I have surround sound systems in my house, so when my alarms go off, it goes off in pretty much every room in my house. So like my whole family knows when I'm jumping in a trade. But yeah, the more annoying usually the better, because then it gets your attention. All right, guys, I definitely got to go. I got to rush to bring my kids to school. Have yourself an amazing day, and I'll see you in the Discord. Today is Thursday, so today is Lucas's call. He'll teach you about market structure, and he's really good at smart money concepts, so he can walk you through that stuff. But yeah, check out Brian's channel. Alex O'Crypto's here. If he's live, check out his. And yeah, have an amazing day.